I don't think it's the Bear Stearns moment for the industry, and let me explain why. There's a lot of experiments going on in the crypto market now, and Luna is an experiment. An idea that you can use an algorithm to somehow support a stablecoin has proven to be a falsehood, and that's okay. That doesn't change the basic concept of what a stablecoin can be. I, as a user of stablecoins, would prefer one that is really denominated by the US dollar, and the policy that's been put forward, or at least proposed policy from the Haggerty bill and the Toomey bill, very simple. They're saying, look, let's audit this every 30 days and let's make sure that the underlying asset supporting the token or coin has a duration of less than 12 months. That makes a lot of sense to me. So I think they should put that policy in place, pass it, and let lots of stablecoins compete under that regulatory environment.
It's been a brutal few weeks for the crypto market. $500 billion was wiped off the sector's market cap as Terra USD, one of the most popular US dollar-pegged stablecoins, imploded virtually overnight. Meanwhile, digital coins such as Ether continue to take a beating on the price charts as the sell-off keeps hammering the industry. Some investors have called the events of the last month a Bear Stearns moment for crypto, comparing the contagion effect of a failed stablecoin project to the fall of a major Wall Street bank that ultimately foretold the 2008 mortgage debt and financial crisis. Hello and welcome to Money Talks. In today's video, Shark Tank investor, Canadian businessman and entrepreneur Kevin O'Leary updates about the impacts of Terra Luna's collapse on the overall crypto markets, importance of stablecoin regulation in US, and what would a proof-of-work ban mean for New York State. Kevin also explains that a ban on Bitcoin mining is a silly idea, one that will make New York uninvestable. Make sure to stick around till the end of this video where Senator Cory Booker puts forward the government perspective regarding cryptocurrency regulation and his thoughts on the sudden downfall of Terra. So, without wasting any time, let's dive right into the video.
Now, if you wish to invest in something that's algorithmic, that's okay. That's like going to Las Vegas. And I don't have a problem with that, but to say that something blows up that's just a speculation, well, when you put all your money on black in Las Vegas and it's red, you lose it all. That's okay. It's a form of entertainment in my view. There's no problem with what happened there, but it is not the future of what the payment system of stablecoin can be. We do need regulation in my view, on a stablecoin backed by the US dollar, and I'll tell you why. If you are compliant within the financial services industry, as I have to be, because this is not my only investment. I'm involved in many regulated different financial services. My own compliance department doesn't know what a stablecoin is yet. My auditors don't know what a stablecoin is yet because there's no policy to focus on. There's no regulatory environment. There's no regulatory infrastructure. It's not going to make a difference to the industry because Bitcoin mining will go on, but it's really bad for New York.
Not long after the New York State Assembly was mulling imposing a 2-year moratorium on certain sorts of proof-of-work cryptocurrency mining businesses on its territory, powerful figures in the industry are expressing their views on such efforts, including Shark Tank's Kevin O'Leary. Specifically, the venture capitalist and multimillionaire commented about what a POW ban would mean for New York State. According to him, such a thing wouldn't make a difference to the industry as a whole because Bitcoin mining will go on, but it's really bad for New York. O'Leary believes that most miners would prefer to use hydroelectricity, which New York has in abundance, instead of the more harmful carbon-burning power. The state itself would get lots of tax dollars and good jobs out of this, but all they've done is scared capital away.
I mean, New York has an abundance of hydroelectricity, which most miners would prefer to use than carbon-burning power. They could get lots of tax dollars and good jobs out of this, and all they've done is scared capital away. I had a project that we were going to do in New York, and we moved it to Norway. And so it's a very successful, completely zero carbon emission data center. New York could have got it, but instead we took that capital and moved it to where the environment's far more friendly for business. New York is in a state of confusion, I think. People don't understand the opportunity here. But look, it's their state. They can do what they wish. But there's a reason real estate prices have gone up in Miami. It's all the people leaving New York. California, New York, and Massachusetts are examples of poorly managed states. And I don't want to pull any punches on it. I would not invest there. I would invest in places like Texas and Florida, Norway, Switzerland, United Arab Emirates, that have stable policy around digital currencies. Now, maybe New York thinks that Bitcoin is going away. It's their purview to do that, but it is not creating jobs, it is not attracting capital, and certainly policymakers there need to do a little more work on understanding what Bitcoin mining can be for them. But right now, it's uninvestable. Imagine saying that about a state, uninvestable.
As an example, O'Leary mentioned one of his own projects, a successful and completely zero carbon emission data center, which he said had to be moved to Norway, an environment he considers far more friendly to business. The anti-crypto attitude of New York is also one of the reasons why, in his opinion, real estate prices have gone up in Miami. It's all the people leaving New York. California, New York, and Massachusetts are examples of poorly managed states, and I don't want to pull any punches on it. I would not invest there. I would invest in places like Texas, Florida, Norway, Switzerland, United Arab Emirates that have a stable policy around digital currencies. O'Leary opened New York is making a mistake in thinking that Bitcoin is going away. It is their purview to do that, but it is not creating jobs, it is not attracting capital, and certainly, policymakers there need to do a little more work on understanding what Bitcoin mining can be for them. Finally, the venture capitalist highlighted that, but right now it's uninvestable. Imagine saying that about a state. Uninvestable. O'Leary's enthusiasm surrounding cryptocurrencies, including optimism that banning Bitcoin and other cryptocurrencies was no longer an existential threat. In early March, he said that cryptocurrencies accounted for as much as 20% of his investment portfolio.
This is a whole new expansive world, and you're going to see people trying different things. I know they're going back to the drawing board to try to figure out a way to make this work, but I think this is it's a whole new frontier. And you're going to see, I think, a lot of really interesting opportunities continue to expand in this space, and you're going to see more and more people wanting to participate. Well, look, I mean, the word regulation is not a neutral word. I want regulation in, industries that protect my food, that are going to help keep us safe. I don't want there to be regulation. When I was mayor, some of the environmental standards were not really achieving what people wanted to, and it was creating more difficult to do projects. So we have to be very clear here. There needs to be rules to this game that make it more predictable, transparent, with the needed consumer protections. That's very important. What we don't want to do is choke a new industry and innovation out so that we lose out on opportunities, or what I'm seeing right now, a lot of these opportunities just move offshore and we're missing the economic growth and job creation that's a part of it. So this is a really important space that we get the regulation right that can actually be helpful to the industry and protecting consumers. And so I think that that's what we're doing. I think there's the core in the Senate I can speak to, whether it's Debbie Stabenow and Kirsten Gillibrand or Senator Lummis and Toomey. There are a lot of good folks in here on both sides of the aisle that have come together, and we're partnering to try to get this right. Well, look, I want there to be the right regulation. I don't think the SEC is the place to regulate a lot of this industry. Clearly, Ethereum and Bitcoin, which are the majority of the cryptocurrencies, are more commodity-like. That's why, as a guy who's on the Ag Committee, I think that it should be the CFTC. And so that's where my passion is getting this right, and then making sure we understand not just to protect against the downside, but let's look at the upside. What I'm excited about is the potential disintermediation of these massive institutions that often are doing us a disservice. You look at places like where I live in Newark, New Jersey, in a low-income Black and brown community that has been exploited in so many ways by these big institutions, whether it's transaction fees or redlining or exclusion of loan and business opportunities. We've tried to create rules of the road like CRA, Consumer Reinvestment Act, and more, but the reality is we are still having systems, financial institutions that are not serving people that are often marginalized or left out of the system. Now, crypto's interesting. You've got 25%, literally a quarter of all African Americans in America are involved in this space. You've got 17% of Latinos. You have 27% of the Americans that are involved in crypto don't have a credit card. And this is showing what some of the potential of Web 3.0 is, to disintermediate a lot of these financial institutions that often take their percentages. And I'm talking about everything from check cashing to bigger banks. And then now we have ways of helping entrepreneurs not have to pay the swipe fees, or people who are working hard and sending things back to their countries of origin, not having to do remittances. I'm hoping it doesn't just become about politicians chasing money, because that's what's making this town, in my opinion, more corrupt. And I mean, God, things like Citizens United and others have had ungodly amounts of money pouring in here. I hope this stays what I want it to be, which is a space where you see Republicans and Democrats, sort of like the Fiorillo LaGuardia said, there's no Republican or Democratic way to fix a pothole. This is technology, this is innovation, this is opportunity. There should be a lot of common ground. I mean, dear God, I think there's an exhaustion in America. We've got this culture of contempt going on where we don't even want to listen to each other unless you're part of my tribe. And if you're not a part of my tribe, then you're bad, you're evil, you're what have you. This is killing our country.
Speaking on the Terra Luna, O'Leary said the failed project does not elaborate the basic concept of what a stablecoin should be. However, he bashed algorithmic stablecoin in favor of those with a dollar-backed reserve. In his opinion, stablecoins like UST are a form of entertainment, just like visiting Las Vegas. Additionally, he presented a pro-regulation front, saying stablecoin oversight would guide businesses on how to use digital assets. A clear framework would also generate healthy competition among various crypto projects. So when do you think Bitcoin will recover from the recent crashes it faced? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.